All right, and we are back, investors and traders, with MarketFi maven and author of Create Income with Option Spreads, Nic Chahine. Good morning, Nick.
Good morning to you guys.
Now it's very early over there, but as you just said, you saw the futures ripping. I know that you and your traders that you're more of a macro kind of top down. You take a look and then start playing in some. I think some of your favorite stocks, as I would call them. But what are you seeing with the futures ripping today, and what are you looking at?
Well, definitely. Everything is driven from the macro for me. I zoom out to the Hubble, I guess, from a Hubble perspective backwards, and see what's going on, so I can find the micros within. So yeah, I just saw the futures for the small caps rip. They weren't participating; they were flattish, where the other guys were, plus 0.2% or something, and they just joined the party at. But still not leading up, and it's probably because the CPI didn't come in hot. I was worried about that. Yellen told us to ignore it a couple of months ago when it came in a little hotter than. So it looks like she was right to ignore it for one time.
Aren't they just buying this market right now? No matter no matter what that number would have been, I think they would have been spot the market. Don't you think that, Nick?
Yes, they came in with momentum. We expected it last night. Last week when I did my write-up for the week in the video, I thought that this week we should be looking to buy a few winners and pick on a few, long neck giraffes. And I picked two yesterday. Actually last week, I picked LinkedIn and Tesla to pick on, and yesterday they were the only two red ones on my watch list, other than the indices and the VIX and things like that. So it looks like I picked the right ones yesterday. Let's see if it falls through today with them. But yeah, you're right. They're buying everything. And 99.68 overnight high on Apple. I heard you talk about that earlier.
Yeah. Do you think we hit 100? I was thinking we do today.
If we don't, that is so bearish. I can't even tell you.
You said, man, we got to give you some props. When you were on 2 weeks ago, you said the same thing. If Apple doesn't get up to that $100 level, we're in trouble. And then we went for a straight sell-off. Apple rolled over, and then the whole market rolled over. You said that 2 weeks ago, and you were all over it here. Are you making that same prediction here again on pre-market prep?
Well, I'm making the comment. I don't know if it's a prediction. I'm making the comment. Let me look at the open interest. Well, the open interest, the wall, it's still a wall at 100 as far as the options market's concerned for this week for Apple. So they have their work cut out for it. I always said they needed the flying car headline, which doesn't look like it's coming. It's getting the crashing car headline with the sapphire things you guys was talking about. I read the same headline. That it may not be ready. What? That's what everybody's waiting for. Bigger screen, and you can't even get it ready, and it's supposed to launch. I don't believe they're going to be able to launch it if those are the issues they're having now. So just imagine if there is no launch, or the launch is somewhat tainted somehow with something. I think they have their work cut out for it. It could get carried over 100 with the market if the market rips up. Yesterday, you mentioned that earlier, Kyle. Yesterday, I posted a scary chart. 20-year Nasdaq look. It did the last couple. If you put up the monthly, the last candle, the 1 month candle. We're only one candle away from the very thin line of the candle, of the very top of the dot-com level. So that is sobering, in my opinion. Yeah. Yes, it's hundreds of points, but it's 1 month.
I just posted that 20-year Nasdaq chart to the chat too from Nick's blog post yesterday. When you scroll down, you'll see that chart. We had Kara Swisher on yesterday, the co-executive of Recode. She wrote Boomtown for the Wall Street Journal Marketplace, and she pretty much said, for Apple, this bigger screen, the screen is pretty much all that the iPhone 6 is. And with that Sapphire news, I mean, it doesn't look like it's affecting Apple yet at all, but I thought that was pretty big news. If it's true, I mean, it still looks like a rumor right now.
I totally agree, and I think it's a big deal about the Sapphire. I mean, I've had phones forever now, and not one did I scratch one. Not ever did I scratch one, and not ever did I put a cover on. The Gorilla Glass, you can't really scratch it unless you try really hard. So I'm not sure we need the Sapphire. We need, better screens that don't crack if you drop them.
That's for sure.
So you're thinking, Nick, as Apple goes here, potentially the market might go. If Apple turns around, let's set up scenario analysis. This is what we like to do here on pre-market prep. Let's say first scenario, Apple does take out the $100 level and starts to go. You think that's very good for the market then?
Yeah, it just adds to the bullish sentiment. I think last week Joel asked J.C. Peretz if it was the end of the bull market. I think it's the end of the mega bullish sentiment. Not necessarily end of the market, but the go 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 buy 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 is gone, and now it's bye bye for a couple of days and then retrace a little bit. There's not like
Fade
the
trade.
right. It's not a one-way ticket to the moon anymore. But yes, if Apple crosses over 100, that's going to fuel the fire of the bullishness. And yesterday's run-up was a relief pop, no doubt in my mind, that the world did not fall apart over the weekend because of Ukraine issues and Russian invasions and all of that. But the relief pop can easily turn into a good run just by momentum if it gathers like a snowball effect. So if it gathers momentum, yes, it could lead us up a little bit. You mentioned a couple of stocks earlier here, Alcoa, I think. I agree with you. It's looking, what did you call it, itchy?
Itchy, yeah, like itching to go.
It's looking itching to go. Technically, it's looking like it's peaking away and breaking that little upper trend that it had. Open interest looks like they wanted 16 and a half lid on it for the weekly, and maybe on the monthly 17. You also mentioned Facebook. I wanted to address these two because I heard you say them.
Yep.
Facebook also looking itchy, especially if you change the chart to a weekly 12 months. Then it's clear that it's at the upper end and looking to break out. But it has hurdles in the open interest, 72 and a half, and then on the downside, and 74, 75 on the upside.
Going back to the Apple, so we said, that the one scenario would be if it takes out 100 a day. If it doesn't take out 100 a day, if we get up there to make it high at 99.80 and then it turns around, starts rolling over and starts going red, now does that do the same thing that it did a couple weeks ago, drag the overall market down with that?
Mathematically, it has to. What is it, 12, 13% of the NASDAQ?
So you're looking at that perspective.
So mathematically, it is, and psychologically, I think it breaks the bulls a little bit. And I'm not sure it affects the small caps. The small caps have been pretty honest. Last year, they were like high flyers, one day after another. I think I looked at it. We didn't have one day where they spent lower than the previous year's all-time high. So it was a pretty bullish year. So the small caps have been a little more honest this year with the price movement. And the S&P was kind of like meandering the most, and the NASDAQ is high flying on some pretty good earnings reactions, not earnings reports, but I don't care about the reports. It's the reactions to reports that affects the price here at the earnings level. So yes, if Apple breaks down, I think mathematically it's going to drag down the indices. It's a heavyweight, and it's going to also embolden the bears a little bit to dig in their heels with the 100 stance on it. But if they break out of the 100, there's enough pent-up pressure of so many failures that it may go overboard. Just like, remember when you and I were talking about breaking the 1900 level in the SPX?
Yeah, it's so much
It took a while, and then when they did it, boy, did they do it.
They did it, and it didn't look back. It was just gone all the way up to basically 1980.
Yeah, and there were still some shorts caught in that trade. And if they didn't flush out last time, we revisited last week or last couple of weeks when we had a couple of scares, then they made a mistake. I mean, they had their opportunity
shot.
to get out.
I just read a headline saying NASDAQ revisits March 2000. It's the saddest party ever.
Oh, I'm telling you, when you look at it, well, here's the thing. Everybody says this time the NASDAQ is at a lower, less steep incline, correct? Well, which is great. But if I'm saying there, we're one month candle away from the very, very top. Okay, but somebody will say, well, it's hundreds of points. Yes, but you can't take that hundreds of points because the last climb was like a wall, a straight up,
rocket ship mode.
So the hundreds of points, you're going to have to bring them down, extrapolate them down to the slope of this climb, and it's not going to be hundreds of points. So I'm not saying that's it, ring the bell. I'm just saying whatever long positions I'm taking, I'm hedging, and I'm if you follow me, you've seen me tweet and post that I'm actually I'm scalping with, I'll give you an example, Priceline. I made like $3 or $4 in premiums. I'm selling the leaps and closing them the next day for $1, $1.20, $1.30 less. It's just insane for no reason whatsoever. And I sold the 1610 at January call, bought it back the next day for about $1.10 less. And then I sold this 1580. I did the same thing, and then I sold the 1550, and I married it with a 1985 put, and I closed everything. Now I'm out of it completely, but it's dollars. and that's I didn't even sweat it. It's like 25% away from where it was.
Now, Nick, you run the Create Income with Option Spreads newsletter. Someone was asking about it. Yayo, I think. Did you do those trades inside your product?
No, those are inappropriate for my product in there. The product in there is a conservative portfolio that seeks out credit spreads that are conservative enough, and I have parameters that these need to fit. The price line, I did post them in there premium as I did them, so any trader that's following me in there is able to take those trades on their own, but I did not post them in the official portfolio. So the portfolio performance in there, as impressive as it is, it doesn't include any of my personal trades that do not fit the parameters.
You try to keep your portfolio for your subscribers there are low risk.
Yeah, a low risk and something that non-active traders can follow. I don't want to be posting trades, although I am forced to exit trades earlier because of pops. If we time it well and I get 20-30% of maximum gain in 2-3 days and there's still 30, 40, 50 days on the trade, there's no way I'm keeping it open, just because I've captured so much of it in such a short period of time. And in my opinion, it always backfires if you don't close it.
I know another stock you always like to trade is Google, and we haven't talked about it for a few days on the show. What do you think on Google? What's the open interest saying, and what are the technicals saying there, Nick?
Yeah, Google, something weird. Last week, I think we had a couple of big volume. If you look up like a 15-minute chart, 10-day on Google, and you go to 8:15 in the morning, there was a big fat candle. So there's some big movements of companies. I don't know if it's 13Fs related or what, but somebody's building a position in Google. I love the company. I'm very Google involved, and as far as usage, I think they do a great job. The open interest this week, it has challenges starting at 580. And the open interest it goes up to 590, but it's not a clear wall. For some reason, it's not as busy in the weeklies as other stocks, but I do like it. It's looking a little bit bearish technically, but not much. I can argue both sides of the technicals if I'm looking at a 10-day run. So it has opportunity to break out, but I'm out of it because I don't understand some of the dynamics and the big candles that I saw. So I'll just sit back and watch until I get a clearer level, and then I'll trade it. I can probably do an iron condor this week if I'm quick with the trigger and watch it and watch the premium decay.
Can you just set that up for us like an iron condor? How would you go about that, like the mechanics to it?
The mechanics to it, the iron condor is basically taking a bullish and bearish position on a ticker. I'm not going to say stock because it could be an index. And what you do a vertical on like a credit put spread, which is a bullish position. So Google now is 582, for example. And if you say, okay, it's not going to go to 570 this week, so you sell the 570, 567 and a half credit put spread. So you sell the 570 put, that opens the risk. You buy the 567 and a half put behind it lower. That limits the risk to $2.50, and for that you collect 25 cents per contract. And then you do the opposite on the upper end, and you say, okay, it's not going to 592 and a half, so you sell the 592 and a half call. That opens risk on the upside, and you also buy the 595 call to limit your risk, and that gives you another 30 cents. So total you collect what I say down there. So you collect 55 cents for the trade. So your risk is 55 cents minus the total dollars at risk, which is 250, because you can only lose on one side, right? So if stock runs up,
right,
you can lose on one side, not the other. So the ideal situation there, you want Google to just stay lower than 592 and a half and higher than 570. And if that happens, then you've cleared maximum gain of 55 cents for the week. If you do 10 contracts, that's $500-ish.
Okay, Nick. Well, thanks for being on here again. We always like having you here on Tuesday and your options talk and your overall market outlook. So thanks a lot here, Nick, and we're looking forward to talking to you again next week.
Love it, and have a great day, everyone.